We're now at step 2 of the loan process. So on this step, I'm going to go through with you different types of income. So during step 1, we got you pre-approved. And in step 1, when we got you pre-approved, we were looking at all of the different types of income. What I'm going to talk to you about today is going to be all of the different ways that you may possibly be receiving the income. Number 1, let's talk about W-2 income. So a W-2 employee means that you work for a company and this employer pays you. However, with that W-2, you can have lots of different ways that you're paid. Some people are paid based on an annual salary. Some people are paid based on a monthly salary or a weekly salary. Some people are paid hourly. Some people are paid commission. Some people have bonus, overtime. And all of these things are going to dictate the way that we are able to calculate your income. So let's step back a little bit to salary. That's very simple. We know what you make monthly and it is set in stone and nothing changes. How about hourly? Hourly can be a little bit tricky because maybe you are a full-time employee, but maybe sometimes you work 39 hours a week, 38 hours a week, 37 hours a week. That is variable income. And with that type of income, we actually have to average your hours worked. So if you are a full-time employee, make sure you're hitting those 40 hours. That's super important. Then we have overtime. If you are someone who just loves to work and likes to get that overtime in, make sure you keep doing that. Overtime pay is calculated very different. It's calculated based off of an average. So we are going to look at all the overtime that you received over the last 2 years, and we're going to look at the overtime you've received this year, year to date, and we're going to average all of that. Let me just give you an example. Let's say that in 2 years ago, you made so much overtime, you were really hungry, you were making $13,000 a year just in overtime. But then the next year, you were a little bit burnt out and you didn't want to work that much. And your overtime went down to $10,000 for that year. And then the current year, your income spiked back up and you're halfway through the year and you're back at $7,000 again. We are going to eliminate that year before, the 2 years ago, because you were making a higher amount, and we're going to take just last year plus year to date and average those. Let's say on the opposite side, you earned very little overtime 2 years ago, and it just steadily increased. Then we're going to look at the whole picture. We're going to take the 2 years ago, the last year, and the year to date, and that's going to be averaged. A lot of times people will wonder, okay, I made a lot of overtime last year. Why are you only giving me this amount? We have to go based off of the guidelines, and that is what we will be looking at. With bonus income is different because every employer across the United States pays bonus income very differently. So we're going to analyze that based on your employer and the way that they pay bonus. Let's say that your employer pays you once a year. If they do only pay you once a year in bonus, we're going to average over 24 months, and that's it. Let's say that your employer pays you monthly on bonus, then we will be able to utilize the current year to date as well. But it's going to be crucial for us to be able to get that verification from your employer. Let's go back to the different types of pay because we've pretty much covered now the W-2s. Now we're going to go into something called 1099. 1099 means that you are a contract employee. That means that you work for someone, but only when they need you. And you're basically self-employed. It's an independent contractor. When you have a 1099 that's issued to you from an employer, then you're going to file your own business returns, which can be considered a Schedule C within your own tax returns. And the only way that we can calculate that income, the only way is based on your tax returns. Then as a self-employed person, there's different types of pay. Maybe you don't work for someone at all. Maybe you're your own employer. It will depend on the way that you have your business established and set up. We may need 1120s from you. We may need 1065s. There are different types of tax returns for your business that we may need. So that is very important. And the last type of pay that I'm going to discuss is going to be retirement income or Social Security income. or stock option income, this is going to be important because we need to see your awards letter. That is the biggest thing that people are not able to find. However, let me assure you, it is super simple to get your hands on. If you do not have your awards letter for your Social Security or for your retirement, you can just make a quick phone call and you can just ask them to send it over to you. They will always send it just like that via fax, via email, or they may be able to deliver it to you online if you have online access. So now you know a little bit more about income. Of course, not everything, but that's what we're here for. We're going to be the professionals and we're going to make sure that we validate whatever type of income that you receive. And if you have rental properties, that's a little bit different. So we'll look at that for you.